Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a great day. Happy Wednesday to you. We're going to take another look here at Bitcoin, of course, see what's going on. Try to make this one brief and just touch on some important key factors because the simple way to understand it is this, that we're just getting that constant ripsaw to the upside. So if you saw my summary from yesterday, I actually got a bit of a chuckle out of this. Basically expecting the price to rip up to a new all-time high, pull back about 3/4 of the way, and then do it all over again. We are almost exactly seeing that same thing here. And again, this little illustration down here pretty much explains that your price just rips up, destroys most, high leverage shorts, and then destroys high leverage longs right after. So we're pretty much seeing that exact thing right now. So that's kind of what we're looking at there. The overall summary of how to understand what Bitcoin's doing right now, it's exactly that. Same thing, rinse and repeat. Until that discontinues, we can presume it will continue. So I can't even make this up. Like literally, we established an all-time high. Now we're ripping down to this either the local fib level or, more importantly, an area just below or just above the previous low. Okay. So again, as we continue to establish higher highs and higher lows, the price will just continue to work its way up. That's basically what we're seeing here so far. So let's look at the back-end data, see if there's anything we can kind of extract and see what's going on there. But again, truth is Bitcoin's just kind of doing its thing. Let's see here. Taking a look at liquidation on the back end here, we can see next area of concentration is 95,100. Okay, so again, with these high leverage shorts, they keep getting destroyed, right? The reason why this keeps happening is because people keep setting high leverage shorts. Now again, it's not to say that low leverage shorts can't still get stopped out. It's just they're much further away. They're not like deep concentrations here where we see these areas of like interest for the whales. And at this point, they're just making a killing off of it. They go up, they destroy the opposition, they push the price action higher, a bunch of new shorts into the market, they sell, take profit, they're going to come back up and hit them again. Okay, so it's just kind of this normal rinse and repeat, but we are starting to see a little bit less shorts here, which is nice and kind of refreshing to see. But the next area of short liquidation is about 95.1 as a close approximate. I think we can see the same thing here as well. Yeah, 95.2, 95.1, pretty heavy concentration there. So, and there's just a really big amount, basically a large amount of people that feel like that's a safe zone. And I get it, it's just above a round number. And round numbers right now are working pretty well. Yesterday we saw a candle wick up to 93,950. Today we saw a candle wick right here to 94,850. Okay, every one of them are stopping just short of that round number. So please don't be another statistic. Don't set your limit orders at a round number. It's hard to get filled. You're going to be in a big line, if you will. Okay, we can start to see liquidation delta starting to increase. So more longs are entering the market now. We're right at about 4 billion, but this could and should progress lower as the price pulls back, which again, whales are securing profits. They're taking all the profits from yesterday. We take a look here, we can see open interest is heavy at about 92,000. So it just kind of reaffirms the support level for us at 92K. And we can see 92.5 and or about 93.1 as a secondary or tertiary there, at least in the local upper range. Obviously 90.5 is still at solid range there. I've discussed that previously. So an easy way to understand is 92,000 is our local support based on that metric. So we take a look at this current 4-hour candle. We've so far, obviously it's very premature, but we're only 30 minutes in. We're already got a bearish engulfing candle. So this is just that natural, crank up the price, rip it down. So the best thing you could do for yourself is short the top and buy the bottom. I know it's easier said than done, but this is basically just an ascending trend type of range-bound activity. So easy to trade if you identify that range, but difficult to trade if you are a high-leverage idiot. So let's take a look here at the daily time frame and recognize a few things here. First of all, moving averages way below the price. The daily time frame is going to be kind of boring for a while, right? Because we just shot up so fast without correction. That's the moving averages. Everything takes a while to correct itself. So the truth is there's not much here to really extract except for the simple fact that we got stochastic pulling back and the price going up. That pretty much implies we're probably going to see an explosion to the upside here in the relative near future. Because again, once indicators cool down, things start to relax, especially if our RSI gets down closer to 50 or 60, then we're probably going to see a nice little continuation higher. So I'd love to see a little bit more consolidation in this area, but Bitcoin just doesn't want to seem to slow down. So your 4-hour time frame, ascending trend, again, we're above that. This is that short-term trend line here as a rough estimate, kind of letting us know being above the 20-day SMA is a positive bullish sign. Same thing as well with the 50 rather, that's this orange line here. Both are positive, being below the price action, so that's a good sign. So just know if we were to drop below either of those, that could be a cause for potential reversal, or just more importantly, we want to be careful and not just take longs in the blind like we've been able to get away with lately here. For example, what we have a long for Bitcoin, it's 29%, and then of course an ETH short prior to that, and then an OP long as well. So again, as you can see by the dates here, we're maybe averaging one trade every other day. So I'm not getting too crazy with it because the market is just so weird right now that it doesn't make a ton of sense to just be trading your ass off. So please be careful, pump the brakes. I mean, if you're having a good time and you're making some money, by all means, stick to what works. But from a swing trader's perspective right now, this is kind of a trashy market. It can be very difficult because this constant up and down, the aggressive ups and downs are causing a lot of altcoins to be like very confused right now. So that in combination with Bitcoin dominance, take a look at this guy. Wow, that is super high. Obviously, we've been higher before, but generally speaking, alts are taking a pretty big hit in the last 24 to 48 hours. So just know that will eventually or inevitably reverse itself. But for the moment, we can expect alts to kind of bleed out today as Bitcoin continues to rinse and repeat its higher highs and higher lows. Which is weird though, right? Like, why is Bitcoin all-time high, happening and alts are just suffering? Except for Cardano, of course, which is funny in itself altogether. Anyways, there's no real answer or rhyme or reason, but the truth is, most alts are fairly overextended and they're due to continue to correct themselves. It makes perfect sense in a lot of ways, but also very, very like, what's going on here? Anyways, 4-hour time frame, we're kind of in the sweet spot here, above 50, below 70. Generally a positive sign. Again, you're going to find more luck taking longs with Bitcoin than you will taking shorts. MACD is trying to diverge, but hasn't yet. There's been so many false positives on Bitcoin's chart. It's ridiculous. And really, the only thing you can kind of just anticipate here is that greed is a very real thing. So we're going to consistently keep getting these higher highs. And as they continue to get higher highs, the higher lows are going to follow. Until that discontinues, folks, we got to presume it's going to. So let's take a look here at the Ichimoku cloud. This is also, I wouldn't say a false positive, but it's a window of opportunity that's slowly closing. In other words, when the lagging span gets close to the price action, it's letting us know that you may want to consider securing profits. Again, if history repeats itself, as it has so far, we're probably going to see the price pull back to the 92K range, maybe pivot off that local point of control somewhere in here, or of course that heavy concentration of open interest at 92K, or the price just continues up and just fakes everybody out again. I wouldn't be surprised at either, honestly. So again, the consensus here is that if you look at the Ichimoku cloud, we look at every other time frame that we've identified so far. They're all bullish, they're all mostly positive, and majority of them are all pointing up. There's like a couple of small ones that are saying, hey, from a momentum standpoint, we shouldn't go much further. But we know very well at this point, based on history, momentum means very little. And for the most part, coins are just going to continue to defy the laws of trading, just based on the simple fact that greed is a very real thing. And again, greed, folks, it all comes from liquidation levels where people are over leveraging their trades. So the less leverage you use, the more likely you are to find success. That's just the common denominator there. Either way you look at it, hourly, 4-hour, daily time frame all look very good here. There's no reason to consider a short from Bitcoin, even though it'll probably rip down to 90, 91, 92K here shortly. You're going to find a lot more risk trying to short into that than you are going to take a long right now. So I'm not telling you to take a long at this exact moment, but I am telling you that statistically, we're more likely to see the price continue higher after it finds its new bottom. Okay. I hope that makes sense. I know it's not really a definitive, direction. I mean, but literally nobody knows what's going to happen here, right? But all we can take is, or use is what we see in the charts, and the charts are telling us that further upside is more likely. Okay. Now, as far as specific levels, I'll post a playout chart on our Twitter, Telegram, and Discord. I can reverse our fibs, kind of give you perspective there. I haven't updated our fibs yet because today's daily candlestick hasn't closed yet. So as of yesterday's high, roughly 94,000, that is essentially the number we want to go off of so far. Okay. Again, just depends on how you look at it and how what time frames you're trading. Again, I prefer to use larger fib levels myself to give us more specific areas of interest. But for right now, you're just kind of shooting into a barrel, right? Who knows where it's going to go, how much higher it's going to make. Even if you use fib extension and reverse your fibs like I do, that still doesn't tell us a whole heck of a lot. It's always a ballpark. The thing you can rely on though is liquidation in most cases. That's usually a barometer of how quickly something will turn around. Like this, for example, you see this heavy concentration. As soon as that upper, 2 billion was swept at 94.8, the price turned around, right? So again, it's just one of those things that is like really consistent in trading. And if we look here, we can see, of course, again, 95.2 is that area, 95.1, 95.2. So if the price were to recover, it would be safe to presume that the low 95K range will be hit next, possibly even 96K, because we're starting to fill up more in liquidation for shorts up there. Okay. All right. Anyways, just some friendly advice. I hope you have a good rest of your day. Thanks again so much for your time. We'll see you in the next one. Take care.